Will rental housing prices drop in 2024? Let's see. Renters are prioritizing affordability amidst a persistent housing shortage, which continues to drive rental inflation despite an ongoing apartment construction boom. However, dramatic rent decreases from pandemic highs are unlikely in 2024, keeping affordability as a central concern. The pandemic economic recovery, a long-term rental housing shortage, and high mortgage interest rates have fueled a rental price surge since 2021, which has recently begun to slow, offering some relief to renters. National rent prices are nearly 30% higher than pre-pandemic levels, but the rate of increase is slowing, with rents in January only marginally higher than the previous month, indicating a stabilization trend. Despite regional differences, the nationwide slowdown in rental inflation is expected to shield most renters from significant price increases upon lease renewal, emphasizing affordability as a key factor in housing decisions. The year 2024 is anticipated to be a period of stabilization in housing prices for both buying and renting, following interest rate shocks and market pauses in previous years. The low inventory of homes for sale, influenced by high mortgage rates, contributes to the ongoing housing shortage, affecting both the sale and rental markets. The pandemic initially slowed multifamily apartment construction, but a rebound in building permits by December 2021 suggested a potential increase in housing supply, though project completions have been delayed by supply chain and labor issues. An increase in completed multifamily housing projects could eventually slow price growth, but outright price drops are not expected. Rental market competitiveness is rising, as indicated by more frequent rental concessions. The single-family home rental market has not expanded as much as multifamily units, resulting in higher price growth for single-family rentals, particularly affecting millennials delayed from home buying by affordability issues. A decline in building permits since their peak in December 2021 suggests a potential slowdown in new construction projects, exacerbated by elevated interest rates impacting both builders and buyers. Despite indications of cooling rent growth, inflation data has yet to reflect this slowdown, with shelter costs still heavily influencing overall inflation. The Federal Reserve acknowledges the lag between market rent decreases and their reflection in inflation measures, predicting that the impact will eventually appear. Renters are still facing higher prices than pre-pandemic, but a slowdown in rent growth may allow wages to catch up, offering some financial relief. Rent increases have outpaced income growth for decades, making housing increasingly unaffordable, with a significant portion of renters spending a large fraction of their income on rent. The number of renters facing severe cost burdens has reached an all-time high, highlighting the critical need for more affordable housing. The U.S. housing supply has not kept pace with the formation of new households, exacerbating the affordability crisis, particularly for low-income renters. The reduction in affordable housing availability, a trend accelerated by the pandemic, underscores the urgent need for increased low-rent unit construction. Optimism remains that Federal Reserve policy adjustments and a strong labor market could eventually ease the housing market, potentially offering more significant relief to renters. Thank you for joining, and push like and subscribe for more content. Goodbye.